If you don't believe me or you don't get it, I don't have time to convince you. I'm sorry. Those are some of the last words from Satoshi Nakamoto before he disappeared forever. This is going to kick off a new video series about why Bitcoin is going to change the way the world looks at money. And remember, you're gonna want to follow for future renditions of Bitcoin maximalism, and you'll save as a resource for later. And today, we are going to be zooming in on the Bitcoin ETF. The first assumption that we need to agree on is Bitcoin is a highly asymmetric asset. It has fundamental hedging properties to dollars, and its upside is way higher than its downside. In the world of portfolio management, Bitcoin is considered a right tail hedge with very asymmetric properties. But what does that mean? An easy way to conceptualize what exactly this means is you have the 60-40 portfolio, the traditional benchmark portfolio, versus the 60-40 with Bitcoin. It provides a right tail asymmetric hedge to that portfolio to further increase your gains. And by the way, that meme was posted by a multi-trillion-dollar asset manager in the US. Because if you didn't know, the traditional 60% stocks, 40% bonds has had generationally poor performance as the economic climate is changing. And so the key talking point that I want you to get from this video, Bitcoin is a right tail hedge with asymmetric upside, and it has literally never been easier for portfolio managers, pension funds, or corporations to put on their balance sheet. Here's a fun little thought experiment that might make you think. If the annual inflation rate in 2023 was 3.5%, Bitcoin over the same time frame went up 156%. How much money would you have to put in Bitcoin to offset all of your inflation incurred losses?